Hey, good evening, folks. This is Shadow Stars once again, bringing you a video, a quick summary of the AMC's Q2 earnings call and the financial statement. Some of my thoughts and opinions, and some of the important key points that I think need to be highlighted for the earnings call. I've made a document that summarizes this information. And this information I actually will be sharing with the Discord that I'm part of, Networks. It's a completely free Discord. We don't monetize it. There's no paywall to get any sort of information. I'm a member there, and I freely share this information with the folks on there. But without any other stuff, let's get right into it. I'll try to keep it brief. The first thing from their 10Q was that stood out to me was their net cash provided by financial activities. So they're currently sitting at the end of the quarter. So that's what, June 30th, 2021, with a little over $2 billion, and that was confirmed by Adam Aaron on the earnings call. So they've essentially doubled the amount of liquidity, the cash that they have. And we know that this has been controversial because it was raised through, as you see, net proceeds from Class A common stock issuance, almost 1.6 billion. But I won't get into that in this video. Next thing I do want to cover is the maturities of corporate borrowings. So this is AMC's debt. This is just their borrowings. This isn't considering their liabilities in regards to their lease obligations. Adam Aaron actually on the earnings call did say that, hey, they have no debt due until 2023. Well, according to the report, they technically do have some, but it's not nearly the amount that that's crippling per se. 6 months ended in December 31st, 2021, 10 mil, 20 mil, and then you see the first significant amount of money that's due is 580 mil in 2023. The next thing I wanted to really compare their Q1 statement to the Q2 statement in regards to their financial situation. This is just copy and paste from their actual 10Q. Essentially, they said that, hey, attendance levels, if they increase consistent with the company's assumptions described below, they'll have enough to meet minimum liquidity requirements through May of 2022. And that was based on, hey, increased attendance levels beginning third quarter and reaching 85% of pre-COVID levels by the fourth quarter 2021. And obviously hoping for better, more vaccinations and more Hollywood product releases. Now in Q2, their statement, so this most recent one, they've changed their wording. So as you can see, they said that, hey, we have enough planned capital expenditures and currently through the next 12 months. So they haven't specified kind of like Q1 statement in regards to, hey, early May 2022 is when we have at least the minimum liquidity requirements. They're just saying next 12 months. And they're no longer very specific in regards to their the forecast. So 85% of pre-COVID attendance levels, that's not mentioned again in Q2. That's my personal take that they didn't do this. Maybe I'm just looking too much into it, but either way, something different in their statements. Going through now, I've grabbed some of their information from their previous financial statements, their 10Qs. Also double checking with their 10Ks, the annual statements. So the most recent Q2 earnings, 444.7 million dollars of revenue. So that completely crushed expectations. Expectations anywhere on the low side, I saw approximately 280 mil, up to as high as 420 mil. So and between I think what 8 different analysts, their average expectation was about 380 approximately million. So it came in at 444.7, so did extremely well. Now let's compare that to the previous quarter, Q1, so January through March, so significantly better. And then obviously, if you look at the same quarter, Q2, the previous year, 2020, obviously it's completely demolishes it. But obviously, we need to consider the fact that Q2 was in 2020 was when COVID was full blast in session, basically. Particularly in the U.S., I think March was when it was really heavily hit. So Q2, April and onwards was everything was purely locked down. So it would have been really the worst time period. And now, if we compare to pre-COVID time, their most recent pre-COVID times, 2019 Q2, revenue was what 1.4 billion or 1,400.6 million. So we're far ways off, less than a quarter of 2019 levels in regards to revenue. So AMC still has a long way to go. Net earnings, same thing. Still at a loss, 344 million loss compared to the previous quarter, 567.2. So they're definitely reducing their losses. Similar story. Q2 2020, 561. And if we look back to 2019 Q2, they were actually earning money, $49.4 million. Couple things. One thing to really consider is that their costs will most likely increase for Q3 and Q4, but hopefully increased revenue. They'll have more earnings to help offset that, more revenue to offset that. Now, some more news in regards to attendance. So we have it's in thousands. So this most recent quarter, 22,068 versus previous quarter 6,797. And then same quarter the previous year, 100. And then if we compare it to pre-COVID levels, 96,955. So same thing, attendance less than really 1/4, less than a quarter of pre-COVID levels. So it still has a long way to go. And here I do have some of the screen captures from the official 10Qs. So you can see the revenue, the total revenue here, 447. You have these numbers, they'll all line up and match up. Same thing. So that's for Q2 versus 2021 Q2, 2020 Q2, 2021 Q1, 2020 Q1, and then 2019, 2020 Q2, and then 2019 Q2. And it's essentially Adam Aaron's reasoning as to for their increased revenue. They're stating, hey, we had rising attendance, which is definitely true. They had ticket price increases, which I'll slightly elaborate later because Adam does touch upon that in the earnings call. They've had increased beverage and food revenue increase per patron. So each person that attends a movie theater, they're buying more stuff. So instead of just buying a popcorn, maybe they're buying popcorn and a drink. Or instead of popcorn and a drink, they're doing popcorn, drink, and some other food item. I personally think that some of this is actually skewed in regards to the fact that a lot of people that are going to the movie theaters may be more enthusiastic, and as a result, they may be more willing to spend money at the current time. And also, I think it's currently skewed because we are still coming out of the period of serious COVID lockdowns. So people were excited to attend movie theaters, and as a result, we know a lot of money that was pumped into the economy via stimulus checks. So people might have been a little bit more willing to open up their pockets and spend money at movie theaters. But nonetheless, that's my personal opinion and thought. I could be completely wrong. But nonetheless, let me get back to two other reasons that they thought they had increased revenue. One was cost containment. So they're trying to become more efficient, really, reduce costs where possible. And similar, the second point is pruning of marginal theaters. So they're trimming down and getting rid of theaters that are not really profitable or not as profitable. And here, tables, same thing, pulling from 10Qs, the attendance numbers, Q2 2021, Q2 2020, Q1 2021, Q1 2020, Q2 2019, Q2 2018. So we know that attendance figures are really, really down. 96,955 versus 22,068. Remember, these figures are in thousands, so add in 3 more zeros at the end. So 22 million, 6 million, 96 million, onwards. Next thing is Adam Aaron's 10 new news. So he had 10 new facts or 10 new things that he wanted to share with us that he said he didn't cover before. First thing was that ArcLight Pacific Theaters, the 2 leases in California, that was actually hinted a couple weeks ago, I believe, in Los Angeles. But they should be open later this month under the AMC branding. But the real big news was that, hey, they have six theater pickups under lease or signed letter of intent. So total of 3 in Los Angeles. So that 2 from before is included in that 3 count. 2 in Chicago, 1 in Atlanta, and they are in advanced negotiations for 4 more. And 8 out of those 10 theaters are former ArcLight Pacific locations. So that's the first one. Number 2 is 2021. AMC will open a dozen new theaters across the world that were under construction before COVID-19, and 3 of those are in the US. Number 3 is concert movies, sporting events, gaming events, esports at AMC theaters are being implemented. So he lists examples such as concert movies for Chance the Rapper and Halsey. And recently they hosted watching events for UFC. And we know that on the board of directors, they do, I believe, have like the president of Epic Games. And we know that AMC is they're going to be reaching out shortly to GameStop to get some sort of collaboration to see at least see if GameStop is willing to do so. But quote from Adam Aaron is that in regards to the AMC situation, we are on the case, more to come. So we'll have to see what Adam Aaron has to say. Number 4, this was a little bit of an interesting thing for me, was cryptocurrency, Bitcoin, will be accepted at all U.S. AMC theaters by the end of the year. Adam Aaron on the earnings call elaborated about his connection to a SPAC. And in relations to that SPAC, he learned a lot about cryptocurrency, and that apparently gave him the confidence to kind of incorporate that into AMC and accept Bitcoin. Personally, I don't. That is an interesting notion. I just don't see how viable it would be. Bitcoin at its current price is over $40,000 per Bitcoin, so you'd be trading fractional Bitcoins. I'm not sure how practical that is, but nonetheless, I mean, I don't think it can hurt the situation for AMC. But either way, I don't see it as super bullish, to be honest. Number 5 is really tied into their payment acceptance. Apple Pay and Google Pay will be on for online purchases at U.S. theaters will be accepted by end of the year. Number 6 was 300,000 shareholders have joined Investor Connect, AMC's new kind of app communications reach out to its investors. So they're saying 300,000 shareholders, which is a significant portion of AMC's shareholder population. They're saying that, hey, those who have joined Investor Connect as a shareholder, they'll be privy to advanced screenings and other perks and promotions. We know that they recently had the free coffee promotion, the free large popcorn promotion, and I'm sure many more will follow. Number 7 is the Adam stressed his increased social media presence. He said that he has now over 150,000 followers on Twitter, and that his tweets have been read more than 72 million times, and that he's following more than 2,000 users. He constantly stresses, not just on this earning call, but in other interviews, that hey, he's personally writing these tweets. No one else is managing his Twitter account, so he's personally writing all those tweets that in when he tweets it, and in his replies, he's saying that he's getting tons and tons of DMs on Twitter, and that he's reading it, and he's using this as an opportunity to really understand better the AMC shareholder base. Number 8 was he mentioned that there seemed to be very little price resistance for prices being charged at current U.S. movie theaters. He mentioned that last week AMC increased admission prices for their tickets by approximately 5% at many U.S. theaters. So that comes out to be about 50-cent increase on average. Number 9 is that this is fairly positive news in regards to Warner Brothers, and AMC has reached an agreement to show all of Warner Brothers movies being released in 2022. AMC will get that agreement to have 45 days prior to home release. So to help stave off any worries about streaming processes like Netflix or HBO Plus and whatnot, where they'll have the same day release. But for Warner Brothers, AMC will be showing their movies for 45 days in the theaters before it hits the streaming platforms. And number 10, discussion with board to change their insider share policy. They currently have the policy of they need to hold their shares that they're given, owned or granted for 1 year, but they're tweaking that policy in which, for example, the CEO's salary, 8 years of the CEO's salary's worth needs to be held for at least a year. 6 years for the CFO, 4 years for the EVPs, 2 years for the SVPs. And Adam Aaron has promised that he will not sell any shares when he's able to in September of 2021. He also mentions that he'll be going through the Rule 10b-5-1. So essentially, he will be giving control of all these AMC shares to an independent third party, and that independent third party will manage his shares based on the planned outline. And Adam Aaron seems to be pushing the point that, hey, a lot of his financial wealth is tied up in AMC, and he has a vested interest in AMC doing well, which I do not disagree with. But one thing I did want to quickly highlight, because this is something I did do previous research on, and I'll pull this information up, was that Adam Aaron's salary, as per their previous SEC filing, was almost $1.2 million, and he has currently 758,747 shares. So if he needs to hold 8 times his current salary, we can do a quick calculation. 1187500 times 8. He would need to hold, that is approximately what? That is not approximately, exactly $9.5 million worth of shares. So if you use AMC's current price, $9.5 million, and let's just give a simple round number, let's say $35. You round that. Oops, sorry. That's 271,429 shares that he would need to hold. And he currently owns 758,000 shares. So he still has the ability to shave off quite a bit of shares. And this is just strictly for transparency issues. Although the whole notion that, hey, he would need to hold 8 years worth, is significantly better than what the current situation is, where under their policy, he needs to hold triple his salary. So the CEO's triple, the CFO is double, and the rest of the EVPs is double. So it's he's pushing a harder line, but for the most part, a lot of these whether it's a board member on EVP, SVP, CEO, CFO, they're already holding a significantly more. So it's kind of like a false hope, but nonetheless, not too bad overall. I think that the earnings call was really good because we know that AMC sits on a lot of liquidity, a lot of cash. So if things do go change for the worse, they'll be in decent position to hold through. Overall, they do have a lot of corporate debt, but most of their corporate debt's not due for at least almost 2 years, a little over a year. And we know that AMC is on its road to recovery. We see increasing attendance numbers, increasing revenue. So that's some positive news. And that the fact that they're spending money to get more theaters is a pretty bullish sign, because it would show some sort of confidence that, hey, they're able to weather through this storm, and that they wouldn't spend money on these locations if they thought it wasn't going to be successful. And they're looking to branch out into other streams, other modes of gathering revenue to generating profit. So concert movies, sporting events, gaming events, esports, good case. The fact that they're willing to upgrade their systems to allow for Apple Pay, Google Pay, potentially are allowing for cryptocurrencies such as Bitcoin. Hopefully, they allow for other cryptocurrencies and so forth. All very good signs. And so this is purely on the financial aspect. It's still looking bad as a wider picture, but in the short term, a lot of good progress. And so we'll have to see how the next quarter goes, and how the next several releases go, and what sort of attendance levels, what sort of office numbers are generated for that. But that was my earnings calls and the earnings Q2 earnings release summary. Thanks, folks. Until next time, Shadow Stars out.